following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. So make it a great night, folks. This quote is by Walter Anderson. Believe in something big. Your life is worth a noble effort. Market-wise, let's take a look at it out here. We have the Dow down 57, Nasdaq's off 2, S&Ps are off 4.5. Gold contract up $4.70, trading at $1,192 an ounce. Silver up 5 cents at $16.92 an ounce. Platinum down 8 at $1,140 an ounce. Copper flat at $2.81 a pound. Light sweet crude up flat, $47.53 a barrel. Bonds are on the move once again, folks. You get the 10-year up 9 ticks, 129.04. 30-year up 1.8 ticks at 165.09. Bottom line there is that, yeah, Fed wants to go up in rates, but guess what? There's not enough bonds. We don't have enough debt that's out there in the marketplace, folks, that folks want to buy. Supply versus demand. The demand is a lot more than the supply. King dollar is up 87 ticks, trading at 97.38. King dollar's making its way back downtown into that lower 94 area where it spiked down last Wednesday. Euro flat at 109.27, and the yen at 119.70. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? If we take a look at the world of the SPY, where are we going with this? Bottom line is that what you have is this. The market today, you get a sideways move in the market. Dow is down a bit, but all we were doing is that the S&P was coming into the sign of strength, which was on Wednesday. Wednesday we had gone to top side after the Fed came out with their announcement that they were taking the patience away from the statement. Bottom line, what we've done out here in the SPY thus far is that the SPY has traded 50 million shares. That 50 million bottom line is backing into the strength out here from a 288. This high wants to get tested out here. The 212.24, I expect we're going to see that get tested. Qs, the same setup on the Qs. These highs want to get tested. When you're right next to the highs like this, folks, they're going to get tested. And what we have had, as I've been saying, is that on the weekly basis, you had both the SPY and the Index 100 move into the higher swing points, and they were moving into those higher swing points with volume. Excuse me, folks. The Qs are backing down now with 14 million shares. That's backing down to a 40 million share deal. So somehow, some way, those highs want to get tested. If we take a look at the IWM's got a sideways move out here today. That little baby is finishing an ABC structure on the way up. So if we look at the IWM, let's figure this out, because the IWM is going to give us a decent clue as to where at least the structure is finishing. And I guess let's see, it gets interesting here, because it'd be like, okay, where's your A point? I'm going to use 114.38, which is February 2nd low as the A point. And the reason I'm doing that, this would be the most liberal way of doing it, meaning that it's a larger ABC up, but yet the most conservative way of doing it to get an identification as to where the IWM can go. So you take the 114.38 up to the 123, so we get about $9. So that would be 128 128.83. So that's almost done because we hit 126.32. So this is going to be kind of neat watching that shake out. Because if we took the smaller one out of that, the smaller one would have been 118 up to the 123, which is $5, which say that would already be extended up here. Because what you'd want, what I'd like to see set up is this, is I'd like to see the small caps get to that 128. As the small caps are getting to the 128, what you'd see is this. You'd see the SPY and the Qs basically testing its high. That would be a nice little setup. Gold contract. What do we have with gold? Bottom line, gold is moving with conviction. Gold right now is trading at 11.92. And what I expect you're going to see with gold is this, is that the gold contract has been inching its way into the downdraft that was created on March 6th. March 6th, gold gets smoked from 1208 down into the 1195 area. No, 1208, 1200 to 1162. Right now, we're at 1192. We hit 1194 out here today. We've done 150,000 contracts. That's good contracts as we're basically eating into the bar that was generated downtown on March 6th. I expect you're going to get not only up and over that this contract wants to run to 1223. Silver, we take a look at the silver market. Silver has been stronger than gold. If we take a look at the silver market right now, what we have with silver is this. Silver's trading at $16.95. The March 6th bar, it's already taken out with a vengeance also. Silver wants to trade up into this 1835 area. So silver really has some traction behind it, and we'll see how first it overtakes the 1743 area, because 1743 is where it went from 1743 down to 1630. That was February 17th. And then what it's also coming into is the downdraft from January 29th. That's where we went from 1806 to 1679. So you're talking big numbers on the way down. If we go take a look at the TLT, just for the correlation inside this bond market, what you have is this. The TLT is up $1.13 right now. You're at 132.38. And the high out there is 138. This high, 138, man, let me tell you, that wants to go after that 138. Now, King Dollar. King Dollar is going to be the shocker for a lot of folks. And if you saw the journal today out here, it's pretty wild watching this whole thing shake out, because what you had, they had a nice article in the journal today. And what the article was about the amount of money that was pouring or has poured into the currency hedge funds from pension funds in order to basically hedge out their exposure in Europe. Just at the right time, right when the dollar has been going up since May of 2011. Bottom line is that they start switching money out there. Guess what? They're going to get burnt. Bottom line is that the King Dollar right now trading out at 87.38. That spike low of 94.76 wants to get tested first off. What I expect you're going to see, though, is that as soon as it gets inside the 96.47, you're going to see some heavy-duty damage to the downside. The dollar right now has come off the highs and is coming off those highs with some real volume. Inside the Dow Industrials today, the weakness versus the strength, what you have is this, is that McDonald's is pushing it higher. That's up 65 cents. You get 3M up 80 cents. United Technologies up 52, and Home Depot is up 47. Taking it away on the way down, Chevron is down 151. Chevron, XLE, folks, going a lot lower. Pfizer's off 47 cents. You get Cisco down 31, and Intel is off 35. Inside the NDX 100, what do we have moving the NDX 100 around? Netflix is a leader out there. That's up $15. Vipul Communications up 15 cents. You got Google. Google's up $13.81. That more than likely has to do with their new CFO. They are thinking that the new CFO may have some discipline as to ideas versus expenses, because Google, no doubt, has and is flush with cash, and they spend a lot of that cash on ideas. Some of them work great. Some of them just burn a lot of cash. Bottom line is that they got a new CFO that's coming from Morgan Stanley. I believe it's from Morgan Stanley. And the bottom line, yeah, from Morgan Stanley. And what you do have happening there, they're figuring, okay, the little kid on the block, not the new kid, it's just that the big little kid on the block that likes to spend a lot of bread may get some discipline. I doubt it. Not even close. Okay, Google is going to be spending lots of money for a long period of time. If you go look at Google Ventures is set up, bottom line, to do what? Google Ventures is set up, and the guy that's running it figures that we can live to 500 years old. That, folks, let them pour as much money as they want into it, no doubt about it. This is Tom O'Brien. This is TFNN. You stay right there. We're coming right back. Dow Industrials right now down 66. Nasdaq's off 250. S&Ps are off 550. Gold's up 450. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's take a look at this market here. We have the Dow right now down 81. NASDAQ is off 8. S&Ps are off 7.5. And if we go over and we take a look at the XLE, what you're going to see out here, folks, energy. Well, here, actually, what we'll do first is that we will do the oil contract. We take a look at this oil contract. We take a look at the oil contract. What you have with the oil contract is this. That's trading out at 47.48. Bottom line is that there's no juice underneath that contract. I suspect that's going to go try to test the 46 area once again. And the XLE is screaming that it just can't handle price. You're at 76.12 right now inside the XLE. That XLE is going to come back into this lower price point of 74.72, and we'll see if, in fact, that can hold that level. Now, let's go over to our man, Mr. Basil Chapman at the Chapman Wave. And don't forget, folks, every trading day at TFNN, we start programming at 8 o'clock in the morning. We go from 8 until 6 p.m. Eastern Standard Time. Get all the programming right on your cell phone, tfnn.mobi. If you want to get Tiger TV, just go to tfnn.com. On the right-hand side, you're going to see a little box that will have mobile devices. Hit that. You can get Tiger TV, which gives you the audio and the video. And, of course, our man, Mr. Basil Chapman, has an outstanding show each and every trading day, 11 to 12 Eastern Standard Time. Basil Chapman, what's going on?
Hi, Tom. How are you?
I'm doing great. Now, I got to know, did you guys get snow the last couple of days, too, or did it bypass you?
No, it bypassed us.
Thank God.
It's been pretty cold. Actually, it's been very cold.
Okay.
But I think it's going to start warming up one of these days, you know?
Oh, no, it is. It is. I'm happy that it bypassed you, though.
Yes, it did.
Yeah.
I can't even remember anymore. Oh, no, we did. We got, that's right. A couple of days ago, we got about an inch and a half. Nothing much. It
Wow.
we can handle that.
Yeah, no doubt. So what are we going to look at today, Basil?
So, as usual, I've got my Dow chart right up here.
Okay.
And what I'm looking at here, you remember I spoke to you, it was actually over 2 weeks ago, I said to you, something really interesting is happening. It's what I call the sandwich effect. What happened is, I've got it here because it's easier to see if I've got the red candles for down and green candles for up. And this is the Dow from the 4th of March. There was a red candle just after the high that was made at 18,288, the all-time high in the Dow, is what I call a two-bar reversal. And since then, it's hard to believe. You can see the pattern. I'm going to expand this a little bit so that you can see it much clearer. Look at this. Red candle, green candle, red candle, green candle, red candle, tiny little red candle, and then it reverses. So we've had alternate candles, very strong to the downside, with a little inside, with an inside bar that was the green candle. Make the low at 17,620 on the 12th of March, and look what happens. Green candle, red candle. Big green candle on the way up. This is peak A, red candle. Peak B, big green candle, red candle. Big C, leg C, goes to a peak C yesterday. Remember, there was that reversal late in the day, and then we come down. So this is going to be the big test. Do we have a strong red candle tomorrow to say we've changed the pattern? We couldn't get to the previous high. It's going to be very difficult now to break out. Or is it going to be a reversal candle with perhaps the high of today at 18,149 being taken out? So what I do is I put this together, and if you remember, I'd spoken to you about the missing ingredient for me has been just patiently waiting for the S&P weekly chart. In the Chapman way, the methodology essentially looks at the lowest low bar, counts each successively higher peak, grades them, uppercase A, B, C. When you get to the fourth highest peak, that's where other things can happen. Well, we stopped at 21.9, so it's 2,119.59 in the S&P the week of the 27th of February. Two sharp down candles below, and that goes below the 9-period moving average, the black line there, and then it goes above it. And yesterday we were so close, we were within 6 points of getting that leg D. I suspect we're still going to do that. That in fact, there's still just enough upside energy to get us to that leg D in the S&P. That'll be in the 2120 area, and that's where we've got to do an assessment. But what is really important in the way I look at the market is if it's a chessboard and you're looking at all these different pieces and which very important pieces are being taken down. Well, if you look at the transportation index, the transportation index has had this series of failing highs in the weekly chart since it made the top, the last all-time high back in the week of the 28th of November. It's made this cup formation, but it hasn't been able to pierce this very strong resistance line. These resistance lines, although it's just one single line, it's incredible how the price, I've always wondered, how does the price know to stop dead at a trend line?
I know. It's a trip.
I can understand. I can understand the diagonal. You've got a price of, say, on the Dow, let's just name it 12,000. So that sticks in the fund manager's mind. But you say 12,200, then 12,400, so you get a trend line. That's something, it's a phenomenon it's really an intriguing thing. I wonder if there's ever been a study on that. My impression always is that from our human emotions, what happens is we get the same percentage of increase from a rising trend line. So that's how you can get your up channel, because you get overexcited at the top and you come back down and then you start that process all the way over again. So that's how I think you can make it. Now, what's important, so you've got a very important ingredient, the transportation index, which is struggling here. And I've got a potential F in the monthly chart. Now, this is going to be interesting. We've spoken about the IBB, and I spoke to you last Thursday, and I said, I think we are really close. No, it was on Friday. And what I said to you is, the action on Friday in this really important index, sector index, the iShares NASDAQ Biotechnology ETF, the IBB, had an opening price. I've got it here on the daily as 374.97.
Yes.
And then there was a very sharp pullback, and that pullback has continued to the 9-period moving average. So we've gone all the way down from 374 to 356, one of the big, a 20-point drop, one of the biggest percentage drops we've had in a while. But look at this. I did a lot of research in this, and I went through the price of the IBB on Friday, and lo and behold, right here, I think I can show it, right, the opening tick at 9:30 on Friday morning was around number 375. And everything else was below it. It didn't show up in the daily chart, but it showed up in my 120-minute chart. That's how I got to have a look at this. And look what's happened. You made a 375 round number open and high. You had a 367 close on this particular bar, and then you started down. So I would say that just on a purely technical basis, if nothing else, I'd already drawn in on my show on Friday that this rectangle could in fact be the trading range for a little while. And if we start to make lower highs and lower lows, that'll indicate that certainly if we don't make a new high this week, it's a peak D. That'll say that the 9-period exponential moving average of 341 is going to be absolutely critical, because if we give back Friday's candle, that's the weekly candle, and start to go into the week before, that's a very big negative. So I'm starting to see some of the very important sectors deteriorating.
Thanks so much, Basil. Have a great one. Have a safe one. You stay right there, folks. We're coming right back.
You know what's cool? taking something that's good for you, something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. American Express is down 75 cents. You have Boeing off $1.04. Oxy is down 22. We got Honeywell up 4. Walmart is down 26. You got United Technologies off 42. And if we do go back and we take a look at this XLE. So inside the XLE, folks, your largest weighting structure is good old ExxonMobil. ExxonMobil, Chevron, those are the two largest weighting structures. They make up 32% of the XLE. If we go look at ExxonMobil right now, what you're seeing is this. Exxon is trading out at $84.63. The low that was generated out here in Exxon is 82.68. The high of that low is 84.16. Bottom line, it's going to go right after this low. And we'll see whether basically it's going to do another ABC structure on the way down. Because when you do bring Exxon back, we take this on a monthly. What you're going to see set up on a monthly basis here is that you have some monster high volume lows out here. Now, what should happen is this, is that when we take a look at Exxon, what you're going to see is this, is that when we came down in 2008, the high of the low is $81.75. So if that level doesn't hold, if you happen to own Exxon, I'd get a stop in number one, okay? But if that level doesn't hold, meaning the 81.75 is big trouble in paradise, folks. This is why. So we had in 2008, that's when Exxon, the rest of the market went down south in a big way. We went from $81 to $56 in 1 month. We did 1.3 billion shares there. It came, so at the end of the month, it went down to 56, and ended up closing the end of the month at 74. It goes up to 83 the following month. Then what does it do? It comes all the way back down to 55, but it tests that area with lighter volume. As it did that, then it takes off again. It tried to come into that same bar once again. That bar was in August of 2011. The high of that bar is also 81. If you get into that bar, bottom line, that would set up a 67 ExxonMobil. And of course, the 67 ExxonMobil would just basically take apart the XLE. If we go look at Chevron CVX, what you're going to see with Chevron is this. And Chevron is really tricky because what we've had with Chevron is that Chevron's got a couple signs of strength, and it just can't handle her price. If you take a look at how Chevron is set up here on a daily basis, what you're going to see is that it's been holding the bottom, and it's been holding it pretty good, meaning that $100 bottom. You got nice sign of strength going last Thursday, and then it just gave it up again. I suspect what you're going to have there is that we're trading at 104.45, and what Chevron's going to do is Chevron's going to go after the 103.28, which is the high of the low that was generated out here on January 3rd. So you get a lot of different testing procedures that are happening out here, and bottom line is that I expect them to going to just continue to happen. The XLF, now the financials. What do we have with the financials out here? Financials coming off the highs, haven't made its highs yet. Volume is lighter, but bottom line is that what you have out here is this, is that you have your swing point going back to the 10th of March. That's going to get tested. We're at 24.40. That low there is 23.82. Longer, well, it's hard to tell what longer term is, meaning 3, 4, 5 weeks, 6 weeks. Bottom line, what we do have out here in the financials that hasn't been tested is the October 15th high volume swing low. That October 15th high volume swing low, and many of the equities are huge problems. They're going to present huge problems out there, and they're going to get tested. So we'll see. Can they drive this thing higher? Well, I suspect what they will be able to do is they'll drive it into the S&P to test that high. That's the way that is set up. There's no two ways about that. The structure, if we take a look at the E-minis intraday, and you want to see how this was trading out, what you have is this. The E-minis on a 10-minute basis. ESM5. This is what you have happening. So this baby, yes. Okay, so what we did here on a 10-minute basis is this. You're coming into the Wednesday trading day, and you're coming in there with dramatically lighter volume. So we take a look at how this traded out. What you're going to see, let me see, I got to bring this back quite a few days. Whoops, can't do it that way. Okay, I can bring back the SPY. I'll bring back the SPY and we'll do it that way. If you bring back the SPY, what you're going to see is that it's done the same thing. Look at that. Why do I want to do that for me? I'm doing something wrong. Bottom line is that you're coming back into that day and you're doing it with lighter volume. And what I expect you're going to see there, you're going to see is rejection of lower price. You have lighter volume. Bottom line is that these highs look like they want to get tested. Gold market, the XAU, the HUI, you get some action here. The XAU, the HUI, in both cases, what the XAU and the HUI are doing is that that's building cause, far higher price. The XAU right now is at the 70.45. The high of the downdraft is 71.55, which is pretty cool. Because you get into that, you know, we're going to need some strength. But the way that's set up right now is that XAU wants to run up to this 77.83 area. We go take a look at the HUI. What you're going to see inside the HUI is this. HUI right now is trading out at 173.04. The high is 174.05. So the HUI, the Gold Bugs Index, is right at the gap right now. And the way it's laying out here at this gap, it wants to blow right into it. So I suspect what we're going to see out here in the next couple days is you're going to see the dollar take a dive, the metals go topside, and we'll see what kind of strength they have. But the way this is set up right now, it looks to me like the strength's going to be pretty incredible. What you do have, so that's on a technical basis. On a fundamental basis, what you have, which is pretty neat, folks, is that the correlation inside the equity market, meaning the gold market versus where the price of gold is, if you are a fundamentalist, is at one of the lowest it's been since 2008, meaning the correlation as to where gold is trading, where the equities are trading out at, and what that says is this, says two different things. Either gold's going to pull back or the equity's going to go higher. You know, my take is that the equity's going to go higher. Why? Because in both cases, the equities and physical metal have rejected price, done it with lighter volume, and then had a sign of strength coming off those bottoms. That is positive in the aspect of equities want higher price, metals want higher price. Now check this out. Inside the metals, here, I'll give you the bull and the bear here a little. So inside the metals, what is happening is this. The two largest royalty stocks, you have Franco-Nevada, FNV, and you have Royal Gold. Well, we have a little divergence here. FNV has, you know, both of them were decent off the lows. FNV has most of the time been the stronger stock, meaning when I say most of the time, for years. Now, off this bottom, what has happened is that it's doing all right. You know, the stock just went from 45 to 50, but it's like, man, you want to pull back. So that would be bearish in the price of physical metal. But watch this. Now you go over to GOLD, you go over to Royal Gold, different animal. Royal Gold shown real strength. So it's like, man, this divergence, where's this going to shake out? Because Royal Gold had some real nice moves, man. And particularly what I always like to see is this. When you're going into a swing point, and you're going into that swing point and volume is increasing, and you don't get the movement, oh, that's normally really sweet. Because what it is this, is that Royal Gold at 67.94 start pushing with monster volume going into that swing. And that is a huge number, folks, okay? So inside that correlation, we push with 1.6 million. You're going into 1.3. So Royal Gold was actually pushing into the swing point where the downdraft was with 300,000 more shares than the actual downdraft. That sets up what? That sets up a high a run to the high of 77, which is pretty cool, man. So we'll watch how this whole thing shakes out. But deviance, the market has it all out here, meaning the metals market and the dollar index, because as the world goes into the aspect that the king dollar is never going to stop, guess what? It stopped, and it stopped dead in its tracks. It did a 1 to 2 ABC structure in the way up. It basically came off those levels with a high volume spike on the way down. You get a follow through on the way down with volume. I suspect we're going to see another follow through this week. You get another follow through this week, man, and if you're going to go to Europe, I suspect you better change those dollars into euros right now, or get over to everbank.com/TFNN and open that euro account, because this is the time to do it. The dollar's backing off. You want to open an account in a different foreign currency, it's everbank.com/TFNN. We'll come right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We get the S&Ps trading out here, the future S&Ps at 2085. And it is in no man's land right now at that level, folks, because what you have is this. You come off those highs of 2101. Bottom line is that when we went topside on the 19th, you started out at this 2075 area. So if those S&Ps are going to basically get out of their way, they're going to get inside about another point higher ASAP. I mean, big time, too. I suspect, these highs still want to be tested, but it doesn't mean that you can't go to the bottom of the consolidation before that happens. So we'll see how the whole thing does shake out. The biggest moves that you want to keep your eye on, folks, are going to be the dollar. The dollar is going to put some spin on things. And if you read that story in the Journal this morning, what you're going to see is that you can get the whiplash. The companies can get the whiplash in an incredible way. Because if they are putting on their hedges now at these much higher levels inside the dollar, that just sets up problems in a huge way. Because what the Journal was talking about, you're talking about huge money, not small money, that was getting pushed into the currency markets. I mean, big dollars were getting pushed in there. So we'll see how that whole thing does shake out. But what does happen is that currency trading in general is hugely risky. The moves are incredible. And if I'm right in the context of how this dollar is going to move, what you're going to see is that the move inside the dollar, particularly, when you have big, larger changes of trend, folks, the moves can be fast and furious. This dollar has gone nonstop since May of 2011, topside. When you have a move that's that long, number one, and a one-way move, a normal correction, just a normal correction, is a 50% correction. A 50% correction in the dollar, okay, would be shocking. Okay, why? Because the amount of points that it would pull back would just blow people's mind. In fact, if we take a look at it, I'll put this up right now. Let me just see this for a second. Let me change this status for a second. I'm going to change this. I'm going to put the dollar up for you, and you're going to see the correlation, and the correlation is pretty intense. And the way that the dollar's trading right now, you're going to have a doji right in the middle. So the dollar is at 97. This dollar wants to run down to 93.38. Never mind the spike low that was generated out there last Wednesday at 94. This thing's going to run lower. If we put this up on a monthly basis, what you're going to see is this, is that we went straight up. Let me get this. So 14. Okay, so if you did a 50% retracement, well, hey, listen, let's do a 38% retracement first. A 38% retracement is still 92. So that's check this out. A 38% retracement is a bull market retracement. That's one of the least amount of retracements you can do after a long period run like we have. So that's 92. A 50% retracement is 89. A 0.618 is 87. Let me tell you something. You get any one of them, number one is going to put monster fuel into the metals market. It's going to throw a jamming into the fundamental hedging basis of what these companies are trying to do right now. If I remember, this was actually before I even got into the market, meaning on a continual basis. I remember Procter & Gamble, they got sold a bill of goods, I think in like maybe 84. They get sold a huge bill of goods. And that's the bottom line is that most of these companies are getting sold a bill of goods right now in the aspect of hedging mechanisms because the dollar has gone so high. Because it's really easy, okay? It's really easy for a bank and a broker-dealer to turn around into a large multinational and sell them a hedging strategy. Because the bottom line is that they're doing billions of dollars. And what I've never quite understood is that why doesn't particularly now, because what you have happening right now, folks, is this. Is you have the aspect that these large companies have a lot of money overseas. If they use the money overseas, there's no big deal. If they bring it back to the U.S., yeah, there's a big deal. But guess what? They haven't been paying taxes, so they're not going to bring it back to the U.S. anyway. So it should be, we should give them an option lesson as about what delta neutral is, okay? Because the bottom line is that delta neutral is if you make money in a company, you want to be, in a country, you want to be spending that same type of money. That's a lot easier right now because the European Union is so large, okay? So bottom line, when all said and done, I expect what you're going to see out here is that the losses are going to accelerate more. Why? Because of the fact that they're going to be caught. You're going to be hearing currency problems. Yeah, the next quarter out. That's how this is shaking out right now. Some of the Dow stocks out here. Some of the Dow stocks are getting a little bit heavy too. You got IBM. Once again, IBM couldn't handle the deal. This 165, man, who is ever selling IBM, whatever fund is selling it up there, man, they are vicious. Each and every time, there must be a standing order up there at 165 because at 165, IBM has been trying to make it over 165 going back to October 31st. So there are evidently millions of shares out there for sale at that level. What we do have inside IBM, because the float is so huge, you're talking about almost 1 billion shares of IBM. That is a big number, folks. When you average the average shares, what IBM does is about 5 to 6 million shares a day. So depending on who is trying to get rid of IBM, and if we do take a look at, let's just see, who are the largest owners of this. I think we looked at this before, and I think Fidelity was actually selling some of it. So if we pull up the largest owners of IBM, you have, no, Fidelity's not selling, they're buying. Okay, let's see this. Okay, that's it. Oh, but you know what? That's what it was. Okay, so check it out. So listen, the next time out, don't be surprised if Fidelity's selling. You know why? Because Wellington's selling. So Fidelity, Wellington, and State Street, folks, they love moving together. And what happens is that I suspect, as I said many times, they don't pick up the phone and talk. But when these numbers come out, okay, they're sitting there with a Bloomberg also, and they're saying, oh, Wellington sold more than half their position. They sold 3.2 million shares. They only had 2 million left as of the December 31st. So bottom line, and there's a lot of other sales out here, but bottom line, I suspect that's what you have happening out here. This is Tom O'Brien. This is TFNN. You stay right there, folks. I'm going to be coming right back. Dow Industrials right now is down 97. Nasdaq's off 14. S&Ps are off 11. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
I'm doing great. You having a good day out there?
I'm having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is a quote by Peter Ustinov. The point of living is to believe the best is yet to come. Market-wise, let's take a look at it out here. We ended out on 104, NASDAQ off 16, S&P's off 9.5, gold contract up $5.90, trading at $1,193 an ounce. Silver up 9 cents at $16.99 an ounce. Platinum down $8 at $1,140 an ounce. Oil flat at $47.42 a barrel. Oil, folks, wants to press into those lows. The XLE looks pretty tough right now. The XLE could be an additional ABC structure on the way down. Bonds. Every bond market, folks, will not give it up. You get the 10-year up 12 ticks, 129.07. That wants the highs. 30-year up 1 full point and 12 ticks at 165.13. Bottom line, inside both of those markets, guess what? There's not enough bonds, U.S. bonds, that is, out in the marketplace right now for the amount of demand there are. Why? Because guess what? For the developed world, we have the highest rates, and they're huge. And they were down dramatically today, by the way. The 10-year right now is trading at 1.8, okay? Bottom line that, you know, we can go through the rest of the world, but that is way over the rest of the world by 200, 300%. You know, the numbers don't sound large, but the percentages are incredibly large, okay? So bottom line is that what you're going to see the bond market continue to go higher in price, lower in yield. Amazing, no doubt. King dollar. King dollar was up 107 ticks today, 97.40. King dollar wants lower price. Euro, and is that deviant? Yes, it is, folks. That King dollar wants lower price with the bond market going up, but guess what? That's what it wants. Euro flat, down 22 ticks today at 109. Euro wants higher price. We'll see whether these are dead cat bounces inside the euro. We'll see if the trend has happened inside the dollar. The higher probability, and we'll know that pretty quickly, I'd say in the next week. If the dollar comes off these highs once again with volume, that is going to be a much larger correction than a regular 0.382. Yen's trading at 119.70. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. If we go to the world of the S&Ps, let's take a look at them. What do you have? SPY out here trading. Put this on a daily for a second. The SPY is trading at a price point of 208.82. What we did out here today, you backed down. We backed down with 70 million shares. That's basically going into 162. So the high is still wants to be tested out here, which is that 212.24. You know, we've hit 211.27. I expect somehow, some way that thing's going to get tested. Why? Because on the weekly, it was pushing in with volume. And thus far on the daily, you know, we're into 2 days right now. The volume is dramatically lighter. You're talking about 143 million versus 755. So the Qs. What you do have inside, though, the S&Ps, there's a lot of stocks that that are weak inside the S&P, and they're basically selling them down. We take a look at the NDX 100, the 3 Qs, sideways move out here today, down 38 cents. You're trading into the strength from the 18th. We had 40 million shares on the 18th, down today with 19 million. The IWM, the small caps, same type of setup as small caps. Small caps trying to finish up that ABC structure on the way up, which is about 2 points higher than we are right now. Now, let's go to this gold market. I want to show you a much longer-term deal inside the gold market. and this is what it is. First, I'm going to bring up the actual contract. So when we take a look at the contract, what you have is this. The contract right now is trading out at a price point of $11.9370. This contract looks to me like it wants to go to $12.23. Now, I'm going to put up the GLD because on a much longer term basis, what you're going to see what this did, it's pretty amazing what we actually did inside the gold contract. Inside the gold market in general, folks, okay? And longer term charts say quite a bit. This one here is going to say, it's going to be pretty incredible looking at this. So I'm going to put this on a monthly. This is the GLD we're talking about. And as I put this on a monthly, I'm going to bring this back to basically, 2005, 2006. What you're going to see is this. The run, the most extraordinary run that the GLD had done. Well, and first off, what you want to understand is that the GLD only came into existence in 2003, I believe. 1 second. Yeah, because it was 2005. Because what had happened also is that when that came into existence, what did that do? Well, you get an ETF structure. Inside an ETF structure, they have to buy the physical in order to basically push the equity out, okay? So that put an expansion in the demand side of gold. Well, GLD goes sideways from 2006 all the way over to 2007. It does a nice pop up to $1,000, meaning the price of gold in 2008. It pulls back to 666. Now, this is the run you want to watch. After we pull back to 666, which was the October 08 low, it was a non-stop run from 66 all the way up to 1900. Inside that run, the last time, and depending on how long you've been listening to TFNN, listening to my program in particular, the last time that we had any volume on the upward side, it was monster volume, and it was in December of 09. Well, December of 09, the high, it was November and December, actually. The high of November was 116.88. The high of December was 119.54. Okay? We had volume there in November of 403 million on the monthly basis. And December, we had 570 million. Okay, so what do? We go top side the whole way. We start pulling back, and where do we pull back into? Well, guess what? We pull back into the last time that there was any large volume at the 115 area. Okay, and how do we do it? Well, the first time that we came down, so picture this for a second, too. This is a much larger call than I'm making here, because this is what it is. We've been coming down since 2011. It's 2015. It's March of 2015. First leg, we went from 1850 down to 1480. You do a counter trend bounce to 1740. Next leg takes you down to 1140. The 1140 area, what were you doing at the 1140 area? 1140 area, on a continual basis, what we were doing is that we were testing that. We've been testing that area, folks, since June of 2013. Okay? So, now watch how this test has been done, because it's so cool, okay? You want to remember something. The benchmark is 570 million. First time we came down there, which we came down hard, in June of 2013, we came down with 254 million. Now, that in itself was pretty good, okay? And what do? You bounce from 1140 gold, and you bounce back up to 1370. Nice expansion, right? Go back downtown again. Guess what? We want to test it again in December. We test that in December. What do we do in December? We get down 185 million. So now you get 185 million going against the 254, going against what? The benchmark. The benchmark is this 570. You go topside again, gold runs and hits the 1280 mark. Not good enough. And this is what happens in the gold market. This is what happens in any market, but it particularly happens in the gold market, particularly after a run like this. You come back down again, you test it out again. We tested out in November. The test in November was 147 million. So now we deal with 147 million versus the 254 versus the 570. And guess what, folks? We tested it this month. And what are we going to test it with? About 144 million. What does that set up? That sets up a run. Now, does that mean that the run has to go up and over the 1,300? No. What are you going to be looking for? You're going to be looking for wide price spread, accelerated volume as you get into the 1250 mark. That 1250 mark is going to be crucial. You get accelerated volume at the 1250, it'll take it up to 1370, and then guess what? It would take it to 1480. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow finished down 104. NASDAQ 16. S&P's off 9.5. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finished down 104, Nasdaq down 16, S&P's off 9. And as we do each and every Tuesday, folks, at 20 past the second hour, we get our man, Mr. Andy Heck. Don't forget, every Tuesday, Thursday, right here at TFNN, outstanding show. Our man, Mr. Andy Heck, is growling and prowling out here with you. 5 to 6 Eastern Standard Time. You can get all the programming right at TFNN, right on your cell phone. TFNN.mobi. And Andy has a great newsletter, folks. It's the Technomento Commodity Report. And we're going to talk to Andy about how he puts that together. We're going to talk to him about his book, actually, and commodities. You can get that newsletter by coming over to our website at TFNN. You go to newsletters, go to trading newsletters, you see the Technomento Commodity Report. You can test drive it right here, right now. 30 days, absolutely free. Andy Heck, what's going on?
How are you today?
I'm doing great. So, hey, listen, now, did you get back to Vegas? You're in California. Where are you now?
Yeah, no, I'm back in Vegas.
Okay.
And next week, Sunday, well, I won't be there here next Tuesday, a week from today, because I'm teaching in the continuing educational program at the University of Colorado Denver Business School on Monday, Tuesday, and Wednesday next week.
Nice.
Which will be fun. Yeah.
So, you know, what we haven't done for a while, Andy, is go over how and what your book is all about, so that people can understand what Technomento is all about.
Okay. We can. I'm going to pick it up. I'll show you a copy of it.
Cool.
It's called How to Make Money with Commodities, published by McGraw-Hill. Came out in 2013.
Okay.
And what I did with the book is it's not really how to trade commodities or anything like that. It's really kind of how important it is to understand raw material markets and be able to analyze them, no matter what you're investing in, whether it's stocks or bonds or foreign currencies, because these raw material markets, commodities, A, they're more volatile than other assets.
Right.
B, their prices affect every other asset. You know, we see that with crude oil and wheat and, you know, all of the things. And the book really highlights how much innate or intrinsic knowledge we have as investors and as consumers of these commodities. Look, we drive cars, we go fill up our cars with gas. So we kind of know, we remember how much we paid last time we filled up our car with gasoline, how much we paid last year, how much we paid 30 years ago, but that's kind of depressing. We know when we go to the supermarket and we buy a steak, or we buy a pork loin, or we buy a loaf of bread, or coffee, or sugar, or, you know, you can go on, or a chocolate bar, you know, how much these things cost and how the prices move around.
And it was just so cool. And this is really cool, folks, because whether you even trade the futures markets or not, as Andy's saying, you should really start to get to understand these, because they trade in the equities markets now, too. But even if you don't trade the equities markets, guess what? You trade them every day because you're buying them. That's what, you know, you're eating and living.
Exactly. And what the book does, Tom, what I really tried to do with the book is to explain to people that it's not just the price that you see in the Wall Street Journal or Investors Business Daily or on CNBC or here on TFNN, you know, that we talk about. The price of crude oil today is $47.50 a barrel. You know, it really explains, hey, what does that price mean? Where does it come from? Does that price really mean anything? Or what are the things that go into making up that price? And when you start to understand all of the kind of pieces of the jigsaw puzzle in each of these markets that go into building the price, you start to have a good understanding of, you know, you become a better investor, where prices may be headed. You make more educated decisions, and these decisions can translate into better investing. You know, look, let's say you're looking at Walmart stock. You know, you like their sales, you like their numbers, maybe they pay a good dividend. I don't know if they pay a dividend or not. It's just an example. You know, it could be any stock, but you have to say to yourself, hey, business activity is picking up, but the oil price is down. They bring all their products to market on trucks. That means that diesel fuel or price, fuel differentials are a big part of price. You know, even turning on the lights, that's electricity, and that could be natural gas. the cost of goods sold include all of these raw materials. And, if you're investing in these things and you don't understand it, then you're only seeing part of the picture. And what I tried to do in the book is to complete the picture, to paint a more detailed picture for investors.
Now, they can get it right at Amazon, right?
Right. Just you can go to the TFNN.com website. If you go to my bio, there's a link to the Amazon ordering page there.
Sweet.
So,
well,
yeah.
You know what's interesting, too, just talking about it, is that, like the rails have got smoked the last week. All the railroads. And,
right.
I was shot a couple of them, and I was shot in the aspect only for the oil aspect. I'm saying to myself, you know what, man, the oil's going down. There's going to be less oil that's coming out there. But then after I went shot, then I start looking at the rails in general. But what was amazing is that the oil is a good business for them, but on the other side coming in, the sand business is a huge business for them. So they're not even getting the sand business coming in anymore, or the oil
for the
going
fracking
out.
and the
fracking.
rigs.
It was a double barrel.
Exactly. You got to add to that also the grain business.
Yeah.
Which is a huge business, and now we're going into planting season, and eventually we'll harvest. And if oil is not on the rail cars, you can bet your petunias there that the corn, wheat, soybeans will be on there.
Let's look at that then. Let's start there, man. See, that's interesting, right? Because they've been just getting squeezed out the last few years, right?
They have been. But actually, for good reason. First of all, the price of oil was very high.
Sure.
Second of all, there's oversupply of grains because the weather was good. We had bumper crops, plenty in silos.
Yeah.
So yes, they have been squeezed out.
Yes.
But every year is different. Weather affects these markets, and there's so many different components that go into. And you mentioned rails. That transportation is a huge part of commodities. Huge part of commodities. And one thing that I do in the book, Tom, which I think makes it easier to understand some of these concepts, because when you start talking about it with the commodity trader nomenclature, people tend to get lost. You talk about things like backwardation and contango.
Right.
People get, they say, oh, this is, too complicated for me. What I do is I give very specific examples. So, for example, talking about transportation, to cement the concept, I tell a story in the book about a time that I was shipping sugar from Santos in Brazil to Odessa in Europe to exchange it for Russian oil.
Okay.
And I put the sugar on a ship, and sugar is a very cheap commodity, so it goes on the old ships.
Right.
The really expensive new ships, the super tankers, all take oil because they get more money to transport higher value commodities. So sugar, at 12 cents or whatever it is.
Yeah, right.
Junky old ship with a hole in it, with a hole in the hull. Well, some water got into the hull. And the sugar, which is vacuumed in, it's not shipped in bags or packed. It's just shipped, kind of bulk shipping into the hull of a ship.
Wow.
Goes in with a giant vacuum cleaner.
Yeah.
Gets sucked out on the other side with a giant vacuum cleaner. Some moisture got in there, and I was left with a giant sugar cube. I had to send guys in there with jackhammers and boots to get the stuff out and recrush it at the other side of the port.
Right there. That's a sick story, man. That's a sick story. This time, Tom O'Brien, Andy Heck, you stay right there, folks. We're coming right back, and we're going to be talking some commodities here. Andy's going to be coming up 5 to 6 right now, right at TFNN. We're going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're talking with our man, Mr. Andy Hecht, and we are talking commodities. And don't forget, folks, coming up right after me, 5 to 6 Eastern Standard Time, Andy's got a great show. You can listen to it right on your web, on your phone at tfnn.mobi. So, let's take a look at some commodities. You know,
yeah, I wanted to mention something important today that I saw in the soft commodity sector.
Okay.
I mean, we could go back and I'll give you my take.
Okay.
But in sugar and coffee today, if you look at the daily charts, I have a daily chart of sugar. You get a key reversal to the downside, very bearish. So here's sugar. You could see we made a higher high than yesterday. Closed below yesterday's lows. Coffee, I'll put up there. Same thing. Higher high from yesterday. This is a bearish pattern on the daily charts.
Yeah, I couldn't handle it.
In cocoa, we had the opposite happen today.
I love it.
We had a bullish key reversal. So interesting, just something to keep in mind.
Well, you know, it's so funny. Oh, listen to this, man. I didn't see it, but this morning, okay, on CNBC, I saw it coming across the screen, and it was saying there's too much cocoa and there's not enough demand. And I'm looking at that, and I was almost going to put up the voice. I said, I don't need that voice, man.
It's a buy signal. Buy signal.
I totally. Oh my God, that's
the buy
crazy.
Signal, they don't come out over 3,000. They come out with that at the bottom. They always do.
Yeah, well,
that.
you know what they were showing? They were showing that it just went from 3,000 down to 2,700, and I said, oh man, they needed a chart before that, folks, because as Andy had said to us, when this thing was at 2,700 about a year ago, he's saying, okay, it wants to go to 3,000. This is a normal pullback. It's like,
right.
Yeah.
This is a market that's just making higher highs and higher lows because of increasing demand for chocolate confectionery products in Asia. It's demand-based, and demand-based rallies are much calmer, and they have many more pullbacks than supply side rallies.
Yeah,
so this is acting perfectly, actually, in my opinion.
Yeah, no, listen, I got a continuous chart up here, and the continuous chart, it's a monster consolidation, man.
Exactly,
you know?
Exactly. And it's so funny, you know, CNBC is great for providing those kind of contrary signals. Yes.
Well, that one there, I thought was particularly pretty wild because of the fact that they're saying there's not enough demand. I'm saying to myself, hold it, man. There's high-end chocolate everywhere now, and people are eating it. And we're not in China. I mean, you know what I mean? But the bottom line is that, as you've said, people, you know, you go up the food chain, man. Once you have high-end or just real good cocoa, meaning chocolate, folks, you're not going back. I mean, and it's good for you. It's not, it's not going to be like eating a McDonald's burger. You know?
By the way, the best one on CNBC at providing the contrarian signals is Mr. Kramer.
Yeah.
Yeah. Actually, Dave White calls him Tokyo Joe.
Oh, Tokyo Joe. Oh, boy. That goes back. Do you remember Tokyo Joe?
Yes,
that's pretty sick. Tokyo Joe, folks, goes back like 1995. Dave's pulling that one out of his hat. That's pretty good.
And I went on in the den when he called him Tokyo Joe. I said, he's more like Tokyo Schmo than Tokyo Joe, because he's a little bit of a clown at times. Anyway, listen, the dollar. The Fed did a great job last week.
Ooh.
They did a great job last week. And what I think happened was government intervention, central bank intervention in the dollar to slow down the trajectory.
Yeah.
And it did a beautiful job. Now, however, I do believe that the fundamentals that underpin the dollar are still there. And I do think that the move, we will continue to move higher in the dollar. The move will be slower. And perhaps when we make new highs next time, you'll see some dollar selling from some coordinated central banks. I think that was the first step in controlling the trajectory. They said 27.5% is enough. And, you know, a one-way rally since May is enough. And I think that that's why they're stepping on it here. Therefore, I do believe that there's some room on the upside in some of these commodities, particularly gold, silver, and copper here. However, I believe these are bear market rallies, and eventually we will turn around when the dollar reasserts itself.
Man, I'm going to come out to Vegas and got to give you a couple shots of gold energy.
We'll see. Listen, I'll tell you the thing that really bothers me about gold is the relationship with platinum. $55 discount, platinum under gold. Again, that bothers me. Also, the gold-silver ratio at 70-1. I know it's come down. I know silver's outperformed. I still would like to see these long-term relationships show me something before I can get excited about these markets here.
Yeah.
So we'll see. Listen, what makes a market.
There's no doubt. You know what I do like, and I was talking about this earlier, the prior hour. The amount of currency hedged funds that have taken in huge money. You're talking about 500, 800 million at a clip from large companies trying to hedge the dollar.
Yes.
That happened in the last 3 weeks. It's like, thank you, God, okay? Because we know how that deal goes, too. Yeah, they're hedging the dollar when the dollar has been on a scream since 2011.
They're running for volatility. There's not, they're all on the volatility hunt. That's what it is.
Yeah.
It always is. And usually that's a signal that the volatility is going to slow down. I think volatility in the dollar is going to slow down because the Fed put its foot on the dollar's head here. No question. There's a lot of signals out there that would have said that a short-term rise in interest rates in the U.S. made some kind of sense, but they cannot afford to do it because it will just throw the markets into a tizzy. It'll cause the dollar to spike higher. It'll hurt U.S. business. It'll make our exports less competitive, and they couldn't do it. So, this is the first shot over the bow, and it was very effective. I mean, we came down 4% real quick, really quick. But the question is it going to follow through on the downside? The fundamentals are still there. This was kind of a shot. They're not going to cut U.S. interest rates. I'll tell you that much.
There's nowhere to cut. But what does happen is that this will be technomental. Well, this would be the fundamental part of it. Bottom line is that our rates, so we're at 1.8 right now in the 10.
Right.
And that's like, let's see. Over Germany, that's
it's still high. It's still high compared relatively.
High. It's 700% higher.
Absolutely, and hey, look at Switzerland. It's infinity.
Their rates are negative. Right? Yeah.
Right. In Denmark, negative. The dollar still offers very good value.
So look at this, folks. This is pretty amazing. In Switzerland, they're charging you 0.119 to basically buy. Wouldn't that be cool, man?
Put money away for 100 years.
Oh my God!
And in about year 95, you owe them money.
That's crazy, man.
It just eats away at the capital. It's amazing.
It's
amazing.
That
is amazing. It's unheard of. Charging storage for money. That's why gold's competitive in those places.
No, listen, man, it might not change. Hey, before you leave, though, I want to talk about cattle, okay?
Yeah, absolutely.
A great story today. So check this out, folks, okay?
I saw it. About the bull?
Yeah!
Yeah, I saw it.
That's a great story, isn't it?
It's a great story. And Tom, it's so true.
Let's tell the folks what it is, okay? So tell the folks what it was all about.
Sure. There is a bull. What did it trade at? It was like some ridiculous number.
Yeah, he bought one bull, folks, 1,500% over the market, 1,700% premium. $130,000 he paid for the bull.
Right, because this bull produces semen that makes feeder cattle.
Fatty tissue.
Perfectly marbled.
Yeah.
Perfectly marbled beef. Prime. In the U.S., we have three kinds of beef. We have prime, we have choice, and what's the other one? Oh, it slips the top of my head. Anyway, prime is the best. You go to a really good steakhouse, you're going to get a prime cut, New York strip, ribeye, perfectly marbled, beautiful beef, delicious, very juicy. Up until a couple of years ago, you couldn't really get prime meat from the supermarket.
Yes.
It was like reserved for restaurants.
Right.
But Costco and companies like that started selling prime. And I got to tell you, for my own self, when I go now, that's all I buy because it's night and day.
It is night and day. And
it's night and day.
It was interesting, folks, when I read the story, Andy, he's a bull on cattle anyway, but when I read it, I said, oh, my God, this is a whole nother aspect of it because this was a rancher that was pushing out regular cattle. Then he decided, oh, man, hold it. The money's in prime. He's converting his whole herd to prime.
It's like the car dealer who's selling Fords, and then he decides to sell Lamborghinis.
That's right.
Basically what it is.
And they're moving them out, and the demand is higher than the supply.
Absolutely, and demand for prime in Asia is huge. So we're going to start changing the way we raise cattle. And global demand for all beef is rising for a couple of reasons. Number one, population is exploding. We're at 7.2 billion.
How many? How many?
7.2 billion people.
Wow.
I mean, when we were born, Tom, probably 2+ billion people in the world, maybe 3. It's doubled in our lifetime. This is it's unbelievable. So more people, bigger wealth, growing wealth, more demand. The Chinese in Asia, a lot of Asians have gone from a rice-based diet to more complex proteins.
Sure.
And the demand for beef is growing.
Amazing.
And the demand for good beef is growing.
Yeah.
And that's all what that article was about. They want these, these beautiful prime stakes. And I'll tell you, if you haven't bought one out there and tried it, it's a little bit extra, but it's worth every penny.
Well worth it. Hey, listen, man, you have a great one, safe one. We look forward to the show in 15 minutes right here, Andy.
Have a great one.
Thanks, man. Stay right there, folks. Come right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say You can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. We had the Dow finish down 104, Nasdaq off 16, S&P's off on 9.5. And if we go over and we take a look, I'm Mr. Basil Chapman. He was talking about these transports, and there's no doubt the transports had come off this high, and the transport's been off the high for quite a while, meaning we're at 89.09 right now. Now, inside of those, bottom line, you have the air, you have the trucks, you have the railroads, and the railroads are coming down, and they've been coming down hard, folks, in a large way, not in a small way. When we take a look at that, what you have is that we're at 8,900, the bottom of that consolidation, and you talk about volume, the bottom of that consolidation at 8,500, has some juice. We'll see if in fact it breaks down as it comes into that area. That's a big number, though, and what the transports had done, they were on a nonstop run topside from December of 2012. They went from 5,000 to 8,000. Once you get into, we're about 110 points away from the 87.92. Because the 87.92 is crucial. Once you get inside of that, you know what you're going to be dealing with? You're dealing with the high volume swing low of October 15th. That is going to be a big number. If we'll take a look at a couple of CSX. Let's see. Actually, the first one is KSU, I believe. KSU, that was the first one. Yeah, so what KSU did, this is Kansas City Southern. Kansas City Southern came out yesterday. They came out with a warning specifically stating that, listen, with the oil price going down, large amount of their business had to do with shipping oil. But it wasn't just shipping oil. It was shipping oil. It was shipping sand into the Dakotas, shipping oil out. And then guess what? It was the amount of surcharges that they've been able to charge all their customers because of the price of oil had gone up so dramatically. So Kansas City had that high volume low at 107. It went from 107 up to 120. So you went up $13. You went up almost 9%. After the high volume low, guess what? It comes down into the high volume low. You're below it right now. You're at 105. And this little baby is going to now go after the high volume swing point from January of 2014. Now, that's at 92. We're at 105. At 92, you know what that actually does? That actually brings Kansas City back to January of 2013. And we pull that back a little bit more, and then what you're going to see, we'll see whether it holds that area. It very well could hold that area. It doesn't hold that area, then you get some deep trouble. I mean, some deep trouble. So as Kansas City comes down, this is going to be a good indication. You can pick any of them, too, by the way. You just don't need Kansas City. They're all acting the same way. You can pick Union Pacific, CSX, Norfolk Southern, Canadian Pacific, Canadian National. Pick any one of them. It doesn't matter. They're all trading the same way. They're all going south. My point is this. As they're going down into those lower swing points, if, in fact, they're breaking those lower swing points with volume, what does it say? A couple different things. It says, number one, that oil is going to stay lower. It says, number two, they're not going to be shipping the sand in there. We'll see where the grains come out in this whole aspect, but it's a big number, folks. It's a large number because inside the transports, it's huge. Now, I'll shift gears with you and just go over to FDX, Federal Express. Federal Express is one of the first ones that came out and specifically said that they weren't making as much money because of the fuel surcharge also. You figure, though, with Federal Express, because the charge has gone down so dramatically, they should be saving money hand over fist. Well, guess what? They're evidently making money hand over fist with the surcharge that were involved. So Federal Express is off its high of 183. You're at 169. Bottom line, FedEx is going to basically try to make a run to 163. Now, 163, we'll see whether it can hold that level. It holds that level, no big deal. Then that's just a consolidation. It is a high volume low that's out there at 163 from December. You break that, though, oh, man, you break that, then it's a whole different animal. You break that, then you're down to 141. You're talking about some major destruction. We go to UPS. We take a look at UPS. And see, all of these correlations inside the transports are really important. Why? Because when you're dealing with the Dow Industrials, the makeup inside that is absolutely huge if, in fact, you are a Dow theory person. UPS is toast. UPS, folks, is traded at 99.26. It came off the high of 114, monster volume. It's making its way down to the bottom of the consolidation, which is 94. You're at 99. You break that level, it's going to have some big problems. So what is going to be intriguing about this, I think, is this. It looks to me, I can picture how much money they're actually saving, but it looks to me as oil was going up, the amount of money that they were making on oil service charges was dramatically higher than most folks, analysts, all of the above actually thought. Why? Because I don't see the aspect that they're basically losing business because people are sending less. We know that they're paying less for gasoline. But bottom line is that the way they're getting sold off in a dramatic way. And that's going to continue to put pressure on the S&P 500, on the Dow Industrials in particular, and of course on the transports. The transports basically are saying, what's being transported, how is it being transported, and is it in fact, are we moving goods across the country? So oil out here, oil's at 47.63. Bottom line is that we'll see whether that lower price holds out there. Today what you had out here is that the oil structure itself, CLK5, the oil structure itself, the way it's traded, it didn't trade bad. It would need more volume, basically to get it to higher price, but it wasn't bad. It's going to be hard I think it's going to be hard at this point. When oil came off the bottom, this contract from 44 to 47, it was a decent way off that bottom. It's inside the range of 45.52, so that's saying, hey, oil has a shot to get up to this 56 area. What doesn't have a shot, it seems, though, is the large integrated oil and gas stocks. Those little babies are in tough shape in a big way. Transocean is trading at $14. That's going to go after its low, and it very well may be an additional ABC structure on the way down. You stay right there, folks. I'm Mr. Andy Heck's going to be coming up with you, growling a problem with you. And don't forget, at TFNN, 8 o'clock in the morning, John Logan starts us off at 8 o'clock in the morning. Get all that programming right on your cell phone, TFNN.mobi. And always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it and fly with it. Thanks for being here, folks. Have a great night, safe night. You stay right there. Andy's coming right up. Go get him, folks.